the first 100 numbers of the counter drone system to the Ministry of Defense. And as I rightly pointed out, we will have a repeat opportunity from the Ministry of Defense on this. And there are several other opportunities which we are working on in terms of even exporting the counter drone system. So that's going to be a big business opportunity, and that's something which is going to play out in the next 1 or 2 quarters. And what was your next question? The offset.
Sir,
You see, we are
offset.
already working, I would say, with the large offset OEMs, which essentially is MBDA and Thales. We do close to about $6-7 million of, I would say, business with them. And that is what exactly we talked about in terms of expanding our offerings to MBDA. That's where we opened the Center of Excellence as far as the test benches go. And that's going to be a very large business, going forward. And we are at the moment in the process of negotiating with MBDA for enhancing the number of test benches which we manufacture. And these are all high value test benches, each test bench costing rather would say price at about $4 to $5 million. And that is a huge business opportunity where we will be hopefully a one-stop shop for MBDA in terms of sourcing their test benches from India. Murli?
Yes, Shashi. Yeah, this is fine. So as far as marine Rafale or any offset program is concerned, I would or we would not be in a position to tell when that would come in, but we can only say we are a strong offset partner for our European OEMs, and we are well prepared for executing those offsets.
Sure. Sir, in the best case scenario, how many test beds do we think is the opportunity for us?
This is something where we are bound by NDA, with MBDA, so we do not want to comment on that. But I would say that it is multiple times the current, I would say the volume of test benches which we are executing.
Sure. So one last question, and I'll go back in the queue. On LCA, now that engines have started to come, when do we start getting orders for our components? I think, if I'm not wrong, we start getting business from the 41st aircraft. So would you have some sense on when do we sort of start to get our orders, which we kind of said?
Our orders are independent of the other dependencies on engines, and therefore we are already getting orders and supplying. We do not.
We are already supplying parts for the LCA, and because of the radar subsystems which we kind of supplied on this program, our supplies come at least 1 year in advance of the aircraft being assembled. So as Murli said, we are not dependent on an engine supply or any other system supply. So our thing is completely different, and we already started supplying parts to on the LCA bit.
Sure. Okay. Thank you, sir. I'll come back in the queue.
Thank you, sir. Next question we have Aman. Please go ahead.
Good afternoon, team. My first question is we are hearing a lot about the Indian drone, the Dome missile project, which is Project Kusha. So, are we participating in that? Have we received any development order on the same? If you can talk about the same. And the second question and clarification was, yes, sir, we have been supplying LCA components for some time now. But I believe the previous participant question was, I think after 45th, 41st, our component per plane will increase drastically. So we wanted to understand when do we see the components scaling, because I think our value addition will be much more. So is that expected sometime first half this year, second half this year? If you can talk about these two things.
Do you have visibility on this?
Yeah, I would only say that yes, there are programs in which we are already there, and we are seeing a steady stream of income through the supplies that AXISCADES group do for LCA. We also have certain other programs that are going to come. I am not seeing any dependency on crossing the threshold of 42 and going up. On the revenue side, I think no, we will have to wait for the revenue projections or the guidelines that will come after our Q4. But one thing I can say is our defense order position is intact to take care of our coming and probably next 3 financial years. So we have a strong order pipeline for defense.
And Project Pusha, sir, development orders or anything we
Yeah,
are
as
doing
far as
on.
missile is concerned, again, AXISCADES Group is involved in certain. We are already supplying certain missile subsystems, such as telemetry systems, and we are also in development of some critical subsystems, electronic subsystems for the missile, which would include the name of the missile that you have mentioned. But right now, we are not in a position to talk about any specific development orders. But we are there. We are there as far as missile subsystem, critical subsystems are concerned.
Sure. Just one final clarity on MRO side. Could you talk about, can it become like a 100 crore business for us over the next 2 years?
Yes.
Okay. Oh, thank you. These are the questions.
Thank you, sir. Next question we have from Sanika. Please go ahead.
Thank you for giving me this opportunity. Most of my questions are just one question which I have. So we had outlined in our co- we had outlined that we're looking for $1 billion revenue in the next 5 years. So are we on track for that?
Shashi, you want to talk? Maybe I can
$1 billion revenue over next 5 years is that what you're saying?
Yes, the next 5 years.
See, we are growing at a much I would say higher rate than how the industry has grown. And in terms of our growth verticals, which is aerospace, defense and ASI, our growth is going to be upwards of 20% per annum. So essentially, we should be reaching near about that in the next 5 years' time.
Okay, and also can we look at a 60% CAGR growth in our EBITDA when we are reaching that target?
Our objective at this is to at least escalate our EBITDA margins by about 200 to 300 basis points from where we are now. So currently our enterprise EBITDA is about 14%, and as I mentioned earlier, the 14% the reason is that it is getting diluted by almost a nil EBITDA which we are getting from non-core. If you look at the core I would say verticals, our EBITDA is already at 20%. So in terms of the absolute number, as what we are talking about, in terms of the growth, as what we have said, what we just now mentioned, there's a good possibility that our EBITDA will be even the absolute EBITDA will have a higher trajectory of growth. I'm not at this moment going to comment about 60% growth in terms of absolute number, but it's going to be a substantial growth. Yes.
Okay. Thank you, sir. Those were my questions. Thank you.
Thank you so much. Next question we have from Tanmay sir. Please go ahead.
Yeah, hi. Thank you so much for the opportunity. Hello. Thank you so much for the opportunity.
Yes, sir. Please.
Yeah, am I audible?
Yeah.
Yeah, okay. So I'm quite new to the company and to the business actually. So I just wanted to understand, and if you can help me a bit. So in our core domain segments, that is aerospace, defense, and ESAI. So as I understand, we are into software as well as hardware. So for example, for radar manufacturing, do we make the whole equipment, or do we provide a part of it to the OEM? And do we take care of the software only or the hardware? How does it work?
Murli? There are two parts of. I think maybe Murli is lost. Okay, so we do two parts with respect to the the radar subsystems and I would say the ESI part which we are talking about, which is the semiconductor bit. One is the services part where we have I would say silicon validation boards. It's a post silicon activity where I would say if at all a semiconductor OEM is coming out with new chips, we essentially test them for various applications, and then we also do production runs for the validation boards where it is tested for various applications. So we do both. So like last year in FY24, our revenues from ASI was about 125 crores, and if you look at what we do with another OEM in the UK, it's actually about 150 odd crores, of which about 50% roughly is the actual services bit, where we now would say test the post-silicon chips in terms of various applications, and the other part of it is the other balance 50% is the actual production part of it.
Sorry, Shashi. So there was some problem in my audio.
Yeah.
Can you listen? Can you hear me?
Basically, the gentleman is asking as to what exactly do we do in terms of semiconductors, and I just explained to him. Maybe you can add to that.
Yeah. So I thought no, he was asking about radar systems and subsystems, right? Yeah, AXISCADES. Yeah, radar has a lot of critical subsystems, and our company is into major subsystems, I can say. Yeah, probably no, you can say 30 to 60% of a radar has our subsystems. So we are also working on new technologies which will improve our presence in different other subsystems apart from what we are working on, and that will also make us more relevant to the future electronic warfare and radar systems.
So, just one more question. In the ESI segment, what is the kind of market that we see right now? And as AI and generative AI, it is basically improving. So, what kind of presence do we see on the software side of it, maybe? And what is the market there, and how much will our presence be, and how much we can grow?
Yeah, it is a tremendous potential. I'm not able to quantify it now. So in ESI, related to AI and generative AI, one area where we are present very strongly is the edge AI. So we develop the AI capability for those equipments and machines to become more smart and uh, execute AI in the device in the edge itself. So we have come up with the edge AI box. And as you already know, we are deploying these systems heavily for defense. We don't stop with the ESI solution. We get into a system level and the product gets into services. So we are working on doing AI and generative AI, no, mainly AI solutions for the electronic warfare applications, which has again tremendous potential. Similar potential exists, and we are working on it. We have potential and presence in the AI area for medical as well as industrial, including automotive.
Okay. And as the previous participant mentioned, if I'm just confirming if I get the number right, which is $1 billion revenue in next 5 years and 200 to 300 bips EBITDA margin improvement.
That's what we are aiming at is.
Oh,
And EBITDA improvement is not going to be restricted to only 200 300 basis points. Our objective is to improve the EBITDA by 200 to 300 basis points each year over the next couple of years.
okay. So that's it from my side, and thank you so much.
Thank you. So next question we have from Pujan sir. Please go ahead. Sure.
Hello.
Yeah,
Hello.
please go ahead.
Yeah, am I audible?
Yeah. Lot of background.
Yeah. Just hold.
Can you go ahead, please? All right.
Yeah. Hello.
Yeah, audible. Better.
Is it clear now?
Yeah.
Yeah. So my first question would be on the energy side. So in energy space, considering the Epogen and automotive considering the ad solution. So I understand about the recalibrating strategy. but just wanted to understand what are the recalibration possibilities been availed or been there, which we can provide, which we avail in a easy manner, and we can at least reach to a single digit EBITDA margin, uh, uh, contraring to currently nil EBITDA margin.
Yeah. So if you see energy business as a whole, we have a mix of businesses with the margins. There are the energy equipment businesses that we are in, and there is also plant engineering business that we are in. So in the past and present, in the past, we had margin issues in our plant engineering business, which is majorly a cogen business. The remaining energy equipment business, which is on the upstream, that businesses were doing all right for us. What we are doing in the terms of recalibration is to ensure that the plant engineering businesses are strengthened. So coming financial year, we would be definitely a bit positive on energy business as a whole and Ecogen as a company also. We have a strong pipeline of projects, and we have built critical capability in specific areas in the plant engineering. Coming to ad solutions, we have a strong capability in one area. However, that is not adequate in the current scheme of things in terms of the geography that we are in and in terms of the service that we are providing. We have a 3-4 layered strategy to build ad solution as a strong brand and as a strong vertical for us. But that is not going to be immediate. Our goal in the coming year is to ensure that it is EBITDA neutral, and it will take some time for us to make it come as a strong brand and a strong business vertical for us.
Okay, thank you, sir. Next question we have from Pankaj, sir. Please go ahead.
Hello, am I audible?
Yeah, you are audible.
Yeah, thank you for the opportunity. So my first question is on aerospace division. As we can understand, 40% and is from product engineering and 40% from manufacturing. Rest 20 is from the repairs and maintenance. But lately we have been hearing that the aerospace industry is currently in big challenge in terms of maintenance, and the additional capacities are being hampered because of the supply chain issues. So what is the challenge that we are facing or we can potentially be facing in the aerospace business in terms of Mistral? That is my first question.
So when you say aerospace business, you're talking about commercial aerospace industry,
Yes,
am I
yes,
right?
yes,
Yeah.
yes.
Our revenue stream comes from the area where aircrafts are being manufactured and serviced. Of course, there is a design, but this is mostly redesign and validation, verification, and all those things. Though there are challenges, you have a strong pipeline of order book with our aerospace customers, and that only gives us a lot of opportunities to perform. There is a lot of pressure to ensure that the number of parts that are produced by these aerospace majors to be increased. And number two, to speed up the repairs and then increase the capacity of the repair, number of repairs that we can, repair engineering that we can do in a day or in a month. There is only a demand from our customers to increase them.
Okay. And secondly, sir, the capex that we are doing in the Bangalore regarding the aerospace division. So what will be doing different from current set of business in aerospace, like supply chain services you have mentioned and some maintenance services. So how they will be different from current set of businesses, and will there be any difference in margin and margins there?
Current set of businesses for commercial aerospace is providing digital engineering services. Means we do services which we call it as concessions for the engineering and then also in the repair. So we do repair engineering.
and we do digital engineering. We work at the factories where these aircrafts are produced, and we provide solutions from our offshore. So they are all digital. The facility that will come up near Bangalore airport would also add physical capabilities. That means we will be able to take aerospace parts and do certain repair, like how we are doing the MRO for the military in the missile launches and other areas. So we would also add manufacturing capabilities where critical components are getting manufactured. This
Okay.
is one. We will also, our goal is also expanded to military aerospace in addition to commercial. So this is where the Mistral or the other subsidiary capabilities are there. We are there in LCA, we were there in AVAC. Our critical electronics components are present in these systems. This can also expand to global OEMs in addition to supplying these systems to our Indian aerospace, military aerospace. That is another goal, and all these facilities would be catering to these needs.
Okay, sir. And my second question is on the defense vertical. So just wanted to understand the life cycle of a single product, let's say a transmitter and receiver, how the product evolved from prototype stage to a product conversion into manufacturing stage, and why we become a sole player. I mean, there are many competitors, but what is our right, and what is the competitive bidding in first stage when we apply for a prototype stage? So how the whole process work? If you can please quickly elaborate on them same.
Any program, I know it is not just for AXISCADES, it is for any player in defense. So you have DRDO labs that develop this technology. The private players like us are expected to participate with the DRDO lab and then develop a technology, develop a solution or a system. Once the system is developed, it also undergoes a rigorous qualification test in the ground first, and also this system should be fitted and then tested in the actual platform. It will be in the sea or it will be in the air or land. It takes years. I would not tell how many years because it varies from program to program. Sometimes you will have to wait for the ship to come to the shore so that your product can be fitted in a ship. Sometimes it is underwater. So there is a lot of waiting time and there are a lot of iterations. Once you pass through all those things, your product becomes qualified. If there is a competition that comes, with times the technology also changes. So it will be very difficult for a competition to enter into a program where there are part numbers which were developed, tested, qualified, and then got into a production phase.
Okay.
Since AXISCADES has been there in this business for 2.5 decades, there is a progress. We are ahead. So it is difficult for us, difficult for others to catch up. The same is the case. No, wherever these defense companies are, they are there where they are, and it can only grow.
And sir, during the research and development process, what if
Sorry to interrupt, sir. Can you come in?
just follow up? What if we fail to develop some products and then competition will have a say in that program? I'm just trying to understand.
See, if you see the defense programs which are critical programs, you may have more than one player.
Okay.
So I'm not telling all tenders work that way. Let us say you want to develop a critical program. There is not only one partner. So the development contract is given to three partners, and all the three develop. Probably out of three, two develop, and then one idea or one combination gets into production, and it is shared with one or two parties. That's also there when the program is critical.
Understood.
Thank you, sir. And next question we have from Pankaj sir. Please go ahead.
I just had a turn, right?
Yeah. Yeah. Okay. Sorry. And then Nirvana sir, please go ahead.
Yeah. Hi, sir. What kind of defense production revenues can we anticipate in FY26? And if you can give a breakup between Mistral and ACAT.
See, with respect to, I would say the defense production revenues, I do not know whether we can, kind of our liberty to, I would say give the exact number, but it's definitely going to be, I would say a significant growth over last year. Last year, if you look at it, our production revenues, from Mistral and ACAT taken together was 258 crores, of which about 55 crores came from ACAT and 203 crores came from Mistral. So in both these entities, we expect a significant growth, and because of the the order book as what we sit on, at the beginning of the financial year.
Sir, last year you said 258 crores. So I think that was the full defense revenues. I'm talking about only production revenue. So I think last year it was 113 crores. I think this year we are on track to do close to 200 crores, right? So I'm asking the number for the next year. And correct me if I'm wrong.
No, 1 second. I'm just looking at the numbers.
Yeah. I think 9-month number is 137 crores on production this year.
I'm talking about FY24. So 203 crores was, yeah, you're right. It is a total Mistral defense, and 55 crores was ACAT. So essentially, the production revenue was 167 crores out of 167 crores for Mistral out of the 203 crores, and then about 55 crores from ACAT. That was the production revenue. But yes, this is going to be a significant uptick with respect to FY26.
Okay, so from 200, we think we can go to 300 in FY26?
Yeah, that is what is the, I would say the outlook as what we have now. Murali, you want to add anything there?
No, Shashi. So yeah, for me, this does not make much difference. So we need both production orders and development orders are important.
Sure. And for the offset deals that you mentioned that you're hoping to crack, the OEM deals, what kind of margins are usually possible in these offset contracts?
It will all be up, no, upwards of 23-24% EBITDA.
Okay, so these are not low margin like 10%
No,
kind
they're
of.
not low margin. They're all high margin.
Okay, and one last question, if I may, on Sukhoi, sir, when do you expect to start supplying components? Is it like FY27 realistic, or will we roll into even the year after that? Whatever visibility you can provide.
You can assume 27 because they are some are upgrades also.
Okay. And sir, on the radar specifications for Sukhoi, we heard Virupaksha was being specified and finalized by DRDO, but now we are hearing one of your competitors has proposed another radar design. So because I think we are hoping to get into the Sukhoi radar in a bigger way. So is there anything you can share there on DRDO's finalization of the radar design?
No, sir, unfortunately. So we are working on various radar programs. I don't think we will be able to concretely tell what DRDO will ultimately decide.
Okay.
But we are very much on different programs, and we are not dependent on any single program's outcome for our growth. That much I can assure you.
Okay, sure. Thank you.
Thank you so much, sir. And then we have question from Akshay, sir. Please go ahead. Akshay, sir, your line is muted. If you can go ahead.
Yeah, am I audible now?
Yeah.
Yeah, so thank you for the opportunity again. For the next year's production of 300 odd crores that we want to achieve, could you kind of give us some color on which programs and which products, maybe a little bit at least, so that we can sort of better understand it?
We do not want to get into program level details, please, but we are sitting on an order book which will take care of the entire revenue plan for FY26 at the beginning of the year. But we do not want to give a breakup with respect to each program and in terms of numbers as what we are talking about.
Sir, we are in
Sure.
development as well as production programs for air, land, ship, and underwater. So there are multiple ongoing projects also where we are not only with the DRDO agencies, we are also with the production agencies like HAL, BEL, and all. There are multiple programs. So if BEL and HAL has a revenue stream, so does AXISCADES.
Sure. So, and does the counter drone get included in this number?
But it does not include the counter drones. I'm talking about the order book besides the counter drones.
Okay. Sure. Okay. Thank you, sir. I'll come back.
Jyoti, if we have finished the questions from the participants, we can have it from the Q&A queue which is there.
You
Yes,
can
ma'am.
read out, Sangeeta.
Yeah, I'll read it out. So there is a question from Sunil. He talks about the debt. How are we going to fund the new capex, and what will be the debt position over the next 2 to 3 years? Shashi, if you can
So
elaborate.
essentially, our net debt currently is less than 50 crores. And in terms of the EBITDA, I would say as what we are projecting for next year and the conversion into cash. So most of what we talked about, the 60-70 crores of capex which we are planning, is going to come in from internal accruals and our current level of cash in bank. So we do not contemplate any additional borrowing for the purpose of capex in this financial year. And we are also looking at our mine offset partners, which is MBDA, to kind of fund part of the capex which we are contemplating for the Center of Excellence, which is just now been inaugurated. So we do not expect any uptick in the level of net borrowing for the purpose of capex.
Yeah. The next question is from Prashant. He talks about ROE. Can our business generate a minimum of 20% ROE in future? Can you please explain and bridge this 20% ROE?
Essentially, we are at about 15% ROE now, and with our focus going forward in terms of the the growth verticals as well as the higher level of EBITDA margins we are talking about, I think it is a good possibility that we should be reaching the 20% ROE in FY26 and FY27.
The next is with Hiral, talking about segment-wise margin guidance for coming years. Can we give that session?
Yeah. You see, aerospace has always been upwards of 20% EBITDA margin. Defense, because depends on the mix between prototypes and production revenue. Having said that, at the moment the rate at which the production revenues are growing is at a much faster pace as against the prototype revenues, which are a nil margin. And the blended EBITDA last year from defense was 17%, and because of the mix with respect to the production revenues being much higher than the prototype revenue, it is also going to be around 19 to 20% in the FY26 and going forward. And of course, as I already talked about, it doesn't include the high margin offset business which I talked about. I'm talking about the order book which we currently have. And then the ESI business has always been a 22% plus kind of an EBITDA margin. And with respect to non-core verticals, that is of course margin decretive, and that's where we are morally explained as to our strategy with respect to improving the margins there.
The next is from Ayush. He says that out of 40 plus approved prototypes, apart from Uttam ASI radar, which other major prototypes are close to production? And what is the estimated timeline for these prototypes for moving into production? So this is very specific pertaining to one particular thing. Murli, any thoughts on this?
No, I would not be able to comment program-wise.
Very specific and program-wise, we will not be
Yes.
able to speak
There will
on
be a
this.
lot of wait time and
Yeah.
There is a steady progress from prototype revenues to production revenues.
The last one is on what kind of margins can we expect from OEM offset, which we already explained. The OEM offset is high margin business. Anything further to add on this?
Hey, so the offset business, which we are hoping to get from the major OEM players, always come at a high margin. That is upwards of, as I was telling you, 24-25% plus kind of margins, and that would definitely add to the defense margins which I talked about.
Sure. Jyoti, do we have time? Can we take more, or we are off time?
Yeah,
How is
we
it?
can do till 5, ma'am.
We can. Okay. So the next is about on
Can I
counter.
read out?
Sure, you can. Yeah.
So,
Just
sure. Mike is having on the defense side. In defense, which are the key program which will lead the production revenue growth of the company?
Again, very program specific.
Okay. How do you see the demand going forward in the defense segment? What is the driver and how long can the momentum continue?
So we have been talking about strong demand, but as we already explained, that we can't be talking about any program specific numbers. As far as defense is concerned, very strong. And Murli, he has reiterated that our growth does not depend upon any particular or single program or outcome for the growth. So the growth momentum continues to be very strong. Anything further, Murli, you would want to add on this?
No, Sangeeta, yeah, well summarized. Yes.
Yeah. Thank you. Can you give the future order book and margin guidance here and also margin guidance segment wise?
I already explained just now.
Okay, thank you. And then Ayush is out of 40 plus approved prototype apart from Uttam ASA, which other
We've
major
already
prototype?
taken this. We've already
Okay,
taken this very
okay,
specific.
sorry.
Yeah.
So, and then can again same. And sir, when you say that 30 to 50% of the radar has our system, do you mean that we address 30-50% of the bill of material for the radar program we work on? Radar.
Yes, you can assume.
So,
Yes,
You can
we've
assume that
covered.
way, or you can assume on the criticality of the radar. There may be a long bill of material, but this would be the critical 30 to 50% of the critical systems.
can we take question from the participant which already raised hand?
Yeah, we can. We have 5 minutes. Yeah.
So, Jatin sir, please go ahead.
Thank you so much for taking my question. Sir, this is just a very curious question I had that regarding counter drone systems. The American Defense Forces have used a system called the Epirus system made by the company called Leonidas. So it's essentially a directed energy weapon, and they see it as the epitome of counter drone system in order to tackle any form of, let it be swarms or single drone. So are we planning something to do like that? Because I think so. Some in IDEX also a proposal was floated, and no one in India is currently doing it. So just I wanted to understand your view on this.
Yeah, there are multiple ways of retaliation. So one, we are jamming, and two, yes, there are directed energy weapons, and there are something called as a killer drones also. We are actively working on different technologies or advanced technologies on detecting these drones, and also using AI for classifying or identifying very accurately, what is the flying object and what are all the characteristics. On the killing side, yes, there are multiple methods such as jamming and then probably deploying killer drones as well as focused energy weapons. So we are working on one technology, and as of now we are working on one technology on the countermeasure.
Okay, got it, sir. Thank you so much.
Thank you. And then we have question from Rupesh. Please go ahead.
Hi, Shashi. Thank you for the follow-up. Two, three quick clarifications. One is this heavy engineering account. We were hoping for a repricing. So has that been accepted? And with the repricing and headcount rationalization, whatever, can we expect, let's say, 8-10% margin in FY26 in heavy engineering? That's a fair thing to model.
Murali?
I think yes.
You see, thankfully, we have already got a, I would say, a positive in terms of EBITDA on this particular heavy engineering account. We should kind of capitalize and leverage on that. And we should be at the level as what you talked about, perhaps by mid of the next financial year.
Okay. And then, Shashi, this just clarification on the numbers you gave. I'm a little bit confused. So FY24, 100 and Mistral, let's talk about Mistral first. 112 crore was production and 80-100 was development. This year, I think we were hoping 160, 170, and then 100 development stays constant. So next year, given Ashwini radar, given LCA, whatever, so 250 plus 100 on Mistral. And then ACAT is roughly 50-60 crore business because of offset, because of counter drone. That business can go from 50-60 to 150. This is a fair understanding?
May not be 150. The one which you talked about, Mistral, generally kind of boxes in, but not the 150 on the ACAT side. It would be perhaps about 25-30 crores less than that.
Okay, I see. And then the final question is this counter drone export opportunity is this, I mean, have we sent the samples to the customer? Have we gotten some feedback, or we are in very early stages? That is one. And then is it like 50-100 unit opportunity, or is it like 1,000-2,000 unit opportunity?
Very early days. Murali, you want to add anything there?
No, I will not be able to quantify the opportunity. So because it involves a lot of stages. So as you know, we have been claiming that we have supplied 100 counter drones, and we have a lot of experience and expertise and credential gained on this. This will see an export presence also in the coming financial year.
So FY26, something at least will happen, right, Murali?
Correct. Definitely something will happen, but I would not be able to say whether it would be 100 or 1,000.
Okay. Thank you so much. It was a fabulous call. Thank you so much, guys. Yeah.
Thank you so much. So Sangeeta ma'am, we can close the call here because we are stretching the time. So yeah, thank you so much, everyone, and thank you management to giving us this opportunity. And it was very good call overall. So thank you so much, Sachin and
Thank you.
Sangeeta.
Thank you.
Thanks. Just want to know, tell you all that if any questions remain unanswered, please write to me directly. Thank you.
Yeah, thank you, ma'am.
Recording stopped.